30 days ago, I had $100. No signals, no indicators, no news feed. Just one rule. I trade only what smart money tells me to. Order blocks, liquidity grabs, break of structure. That's it. Some of these trades I don't want to show you. Because losing on camera in front of thousands of people is not comfortable. But I kept camera rolling anyway. This number right here, it's changed how I think about crypto forever. And by the end of this video you are going to understand exactly why smart money doesn't care about your stop loss and how finally stop being on the wrong side of the trade. Before we get into trades, let me tell you exactly how the experiment worked. The rule 1. The real money. 100 on a live account, no demo, not paper trading, real. Only smart money concept, no RSI, no MACD, no moving averages, no news. If I can justify the deal by the FUG or order blocks or liquidity movement, I don't want to show you these deals. And rule number 3, everything is recorded. Every deal, every trade, every movement. Why 100? Because that's the amount with what you all start with. I want this to be real for you, no hedge funds simulations. Real quick, for those who are new to smart money concept, the idea is simple. Banks and institutions moves markets, we need liquidity to fill their orders. And retail traders, that's us. We provide them the liquidity, their entry points. Our stop losses are their entry points. Smart money concept is about reading their footprints and trading with them, not against them. So here we can see our first deal of our challenge. I started with $100 and here I wanted to enter the long deal because here we have a great liquidity sweeps here, and in my opinion smart money gets a huge power to move in our direction into the long positions to break new highs of the Bitcoin price, and here we can see our FUG from which we can enter. It's our point of interest zone, but the price reversed and I lost 2% of my deal. And of course at the end of this video I will show you these 2 entries which you can use to profit your trading account balance. So price swept my stop and I recorded this to my file where I track all my profits and losses. So now let's move to the day 2 through the 5. I took 3 more trades. I'll be honest, 2 of them I second guessed. I moved my stop, I widened my target, classic mistakes. Let's see it on the chart. So this is the second deal I wanted to enter from the FUG, which I marked here after the liquidity grab. Here it is one of my proofs of the good entry, but the price wanted to grab the liquidity here and only after that went to long movement. So the FUG were fulfilled, break, and the price break all the stop loss points here, and as we can see it is not successful deal. By the end of the week 1 I were these meanings I was down about 30% and it is not a good result for me. 100 had become 62. I saw where on Friday night looking at this account and thought, is this a scam? Did I waste a month? And when I went back and looked at my trades, every single setup was valid. The problem wasn't the strategy, the problem was me. Week 2, I changed one thing. I stopped hunting trades. I started waiting for them. Where's the difference? A big one. Monday, Tuesday, no trades, 0. The setup wasn't there. So Wednesday, the deal on the BTC, wonderful order block from which we can enter because the price grabs the liquidity here and after that break the with FUG, and by the Fibonacci grid we can define the best FUG in the range from which we can enter the deal. So here we can enter from the FUG zone and order block zone, so the price gets our liquidity from these meanings. After that filled our order blocks, the smart money grabs all the positions, refill all the positions, and after went down for the liquidity pool and filled with FUG to move long position. Here we can also enter to one more deal, but I'm not very risk trader and I don't want to do like that, so we get the first profit of our challenge. I waited for the candle to close. I entered. I didn't move my stop. And now we can see the first positive results of my trading challenge. Best trade of the experiment so far. Not because of the money, because I trusted the setup. Waited 2 days for this setup, clean sweep and structure shift confirmation. Day 19. Something happened, what I still think about. I had the best setup for the entire month in front of me. BTC on the daily time frame. Perfect institutional order block. Liquidity swept above the range. Clean break of structure to the downside. Every box checked. I didn't take the trade. I was scared. My account was back at 78 after a rough week and I froze. Price dropped a lot from my entry point, which I'm not entering. Exactly as the setup predict. I watched it happen from the sidelines. That was the most expensive lessons of the experiment, not the losing trades. The trade I was too afraid to take. Week 4. Something shift. I stopped looking at the dollar amount in my account. I started looking at the quality of my decisions. I took 4 trades in the final week. 3 winners, 1 loss, which I took immediately. No hesitation as soon as the setup invalidated. For the first time in 30 days I was trading like I understood what I was looking at. Not because the strategy changed, because I changed. And on day 30 I watched my trading account for the last time. We'll get to the number, but first I want to show you my deals and talk about the things what this experiment teach me how to do. So this is one of my successful deals. Here we can see this VVG zone from which we can already enter, and here we can see the breakout structure of this winning, confirming of our higher high, and after that forming of higher low, and the price are gonna forming higher high and went to the upside trend. And of course here the price formed a good pool of liquidity from which break we can enter a deal. So it is my last trade, the main things from which I would enter. Here is the order block which are formed here and the huge pool of liquidity. In my opinion, in this time the price wouldn't take it because it is gonna lead to a huge down drop of the BTC, and I think in this time it is not necessary for the price to do like that. It is more profitable to grab all the liquidity at the high, took all the money from short traders, and after that forming a next movement to the long positions. And of course at the top we have on our FUGs which price are gonna fulfill and from which we can enter a deal. So here I can see the formed order block and here the liquidity pool. And the first liquidity grab, the downtrend, forming a liquidity pool here. After that, grabbing that, touching order block, and here we already can enter the deal because it is a good formation for us. And here the live trading deal I entered from the future here, and it's all my predictions for the BTC movement of close days. And this deal already can be fixed by the 80% and move stop loss to the not to lose point, and I already done it. And it is 1 hour deal. Here we can see the first grab of liquidity forming of now pool liquidity, grab of the previous point of liquidity, huge drop which are formed of VVG and order block, grab all the liquidity down, all, and it is very good factor. Price reversed to our FUG and we can already enter the short position. And now I need to show you 3 things this experiment taught me what no YouTube video ever did. Lesson 1. Smart money without patience is just gambling. Week 1 I was forcing trades, week 4 I waited 3 days for a single setup. Same strategy, completely different results. The algorithm on TradingView doesn't care how bored you are. Smart money doesn't move on your shadow. No setup, no trade. Full stop. Lesson number 2. The liquidity sweep is a signal, not the entry. This one broke me in the week 1. I was entering on the sweep. The right move is to wait for the reaction after the sweep. Wait for structure to break, then enter. Wait one shift in timing from entry on sweep to enter confirmation. Wait the difference between losing and winning smart money traders. And lesson number 3. Your psychology is a strategy. In the day 90, I had the perfect setup. I froze, lost a lot of dollars in profit. Institutional traders don't have emotions, they have rules. The real work in smart money concept is not learning the patterns, it's learning to execute them when your hands are shaking. 30 days, $140 of profit. And it is all my statistic by the last days, and on the last trade I decided to enter on the huge amount of money because I was 100% sure my trade. 30 days, $100, only smart money concepts. Is that a lot? No. Is that proof what smart money works? Not conclusive. But here's what is conclusive. The first 2 weeks, emotional, undisciplined, I lost 38% of my account. The last 2 weeks, patient, rule-based, I recovered everything and closed in profit. Same strategy, same market, same 100 different trader. If you want to see me do this again, but this time with $500 and a live trader and a live trade breakdown on every single setup, let me know in the comments. And if this video helped you see smart money differently, or you recognize yourself somewhere in those 30 days, that's exactly why I made it. The next video I'll break down the single most important smart money setup you should be looking for in this market cycle. Don't miss it.